What's going on, everyone? Welcome back to the Modern Mortgage Show, where I interview mortgage professionals who share their stories and modern information about the industry. I'm your host, Rocco, and to kick off the week, my guest is Wade Darius, and he's the president and CEO at TD Home Loans out of Orlando, Florida. Wade, welcome to the show.
Thank you, Rico, for having me.
Absolutely. So, Wade, why don't we start the show? Can you just tell us a little bit about yourself and give us a brief intro to who you are?
Definitely. Well, for nearly 20 years, I've been in this industry and trying to make wave and understanding the industry from head to toe and understanding how I can help people because the main reason why we all in this thing is to make sure not just to make money, but also to see how we can help people get through some hard stuff and also help people make their dream come true, especially when it comes to housing. Because a lot of people, housing is their number one investment or the most important investment for them. And how we can do that and making it happen is a great thing. Now, I not only I own a mortgage company, which is the TD Home Loans, and I
Mhm.
also own a real estate company out here in Orlando. And all those firms and all the employees and brokers and realtors also who's with us is doing a phenomenal job into helping. And again, I've gone through all stage in this industry from loan processing, underwriting, loan compliance officer, and to underwriter, all of it. We've gone through all of it. So with that, it gives me a vast variety of experience to help me navigate through the system and help my clients better. Because one of the reasons client comes to me is because of my expertise, and now it's more than ever that I show my expertise in a way to help them navigate through the situation they're going through right now.
Yeah, absolutely. So you said you've been in the industry 20 years now?
Yes, almost about
Awesome.
20 years.
So did you do anything before you got into the industry? Any kind
Um,
of
the thing with this is because all my family, my brothers, they all in the industry. So right after high school, they kind of like pull me into it. Um, I didn't have a choice basically because it's either I do that, and I also go to school trying to be a lawyer, and I dropped out of. Actually, I veered towards mortgage and
Mhm.
focus and stay there, and that's pretty much it for me for the last 20 years. Mortgage and real
Mhm.
estate, basically.
Awesome. So you got pulled in to the industry from your family. Uh,
Yeah.
that's pretty funny. So we're in a very weird time right now. Us and very weird situation. We were kind of talking before the show about this, but what are you doing to get through this uncertain period of time?
I mean, for me in particular, I mean, one thing I'll tell everybody: listen to you to the officials. Stay at home, like I'm doing right now. I'm sitting in my backyard, um, at my lanai, and trying to work at the same time and enjoying staying home. One thing that I try to do is trying to be active in the house. I
Mhm.
realized, not until this time, I realized how important being home was, and so many little things that there is around that I could have done I didn't do. But it's a great time to be home and reflect. But at the same time, it's not so great time for those who's going through such a problem and not understanding what's gonna go next, especially when it comes to mortgages. A lot of people are hearing things out there and they're not even sure what to ask for. Um, it's it's I think it's our job in the mortgage industry to guide the people, to give people a better sense of understanding of what is it that they should be looking for and how is it that they can navigate through this without having to go to have such a hard time.
Mhm.
And for people like us who's doing this thing and broadcasting, talking about things around there for people all around the country, it's think this has been a tremendous help for them. For example, like people are talking about whether or not they should ask for a forbearance or whether or not they should keep their money. What does that entail? How is it they should uh, navigate through this? Will you go back to work? Will you not go back to work? All these things are things that are important that people need to consider, especially when it comes to your mortgage. What I tell all my clients, and what I'm saying to everybody who's listening right now, on a forbearance, I'll tell everyone if you are desperately or you are in need of it, take it. But if you are not, for now, I would say to hold back from it because Forbearance doesn't mean that you're paying the 3 or 4 payment a day you stop making goes away. When the program ended, you have to make those payments. So sometimes you don't have that large lump sum and to make the payment. And because I have been in the background of things and I also have been in the servicing as well throughout my career, I know when it's time for you to refinance, when it's, or not even refinance, when it's time for you to, when the program ended, when you don't have that large lump sum to give to the bank and you back at work, you may not qualify for modification. You may not qualify for deferment. Now, you could be in a situation that is tougher. So if you need it, take it. Or if you have it and you still work, save your money, trying to see when that time comes if you can get yourself in a better situation than not. Because right now, the banks are looking out for us, but we also need to look out for ourselves better.
So in other words, you're saying if you absolutely need it, then take it, or else don't take the forbearance. Make your mortgage payments.
Correct.
Okay.
Because it's good if you're in a situation you take it. It's good for you. But and then when the time comes back, if you have to refinance, you have to do whatever you have to do. You do it because right now you need it. But if you
Mhm.
don't need it, I would tell people right now to stand back and wait a little bit when you do need it. And if you are in need for it, then you go for it.
Right. So, based on what you're seeing right now in the industry, what do you see happening in the future?
Now, a lot of people expect property values to go down.
Yeah.
But I know better. The reason why I said I know better because I've been there when everything goes left in 2008. But at that time, the bank fell. All the banks, they all fell. Now it's not the banking industry that's failing; it's the people. Now, for property to go down is when we have a massive amount of foreclosure. A massive amount of foreclosure is not happening right now because the banks are taking action. They are doing forbearance or everything that they can to keep people from going to foreclosure. So we're not going to see the amount of foreclosure that we saw back in 2008 9. We're not going to see that. So property value may go down,
Mhm.
but it's not going to be as bad as we expect it to be. So it is cautious. If you want to be in the cautious side and thinking that hey, I'm gonna wait and buy my property later, that's up to you. But at the same time, what I'm seeing is where people who's actually working, they taking advantage of the market right now, get the property they need because prior to this, here in Orlando, you have to fight to get your contract in because you put a contract 5 6 person is put in the same contract a contract on that same property. Now we seen one or two, so people are getting the house that they want during this time. So it allows them to do that. And the
Mhm.
next thing I'm seeing is refinance. A lot of people are refinancing. Some of them based on fear, because they think the equity will evaporate all of a sudden. But some of them are doing it because they are getting ready. So we're not going to see as much of a issue that we thought. But then again, we don't know how this thing is gonna play out for the long run. So if
Mhm.
people were able to go back to work within the next 2 to 3 months, everything goes back to normal. I'll say even in the next 6 months, the market will remain stable. But if people don't go back to work within the next 6 months or so, we're going to see a slight decline in the market, and then again, it's not just the market; it's going to be everywhere, everything at the same time.
Makes sense. So, on a moving along now, you've been in the industry for 20 years. I'm sure you've helped a lot of people. What would you say is, the most satisfying or rewarding thing about your job?
The one thing for me is to see the smile on my client face. I like to keep people surprising. I learned that from the get go. Always under promise and try to over deliver. So I do that a lot. So
Mhm.
even if I know one of my clients would tell me, "What? Hey, you told me that the payment was gonna be 1,600, but when I show up and the payment is indeed like 1,300, 1,400." That gives them the sense of relief. I like to do that a lot to
Yeah.
make sure that they are good. But the most satisfying thing for me, I would say, is just to see people making their dreams come true, especially for first-time home buyers. You know, if you're a first-time home buyer and this is your first home, and you know you buying a home at a price that you can actually afford, because unlike many brokers, this is what I do. I
Mhm.
can qualify you for $300,000, but I may not give you a home for 300,000 because I'll ask you the important question, probing question. Yes, you are qualified based on your income, asset, and everything. You qualify for 500,000, 3, 4. It doesn't matter. Now, if you get a $300,000 property based on the taxes and insurance, this will be your mortgage payment. So, can you afford that? A lot of people will say, no. So, if you can't afford that, how much do you think personally you can afford and you will feel okay and your lifestyle is not going to change? A lot of people don't think about their lifestyle when they buying a home. So,
Hmm.
we tell them when you buy a home and you get a payment shock, this will change your lifestyle drastically, and it could go from a happy moment to a nightmare. So, what is it that you can afford? And when they tell me, I'm like, okay, so based on that payment, this is the amount of property, this is the property you should be looking at. So, when they do that, a lot of people will come back to me and say, thank you. Because I get this home and I feel like nothing changed in my life.
Hmm.
And I'm living my dream, yet I'm comfortable. So that's a very important thing for me. And I guess it's been working for the last 20 years, so I'm going to keep it
Mhm.
going.
Yeah, absolutely. There's nothing like, seeing your service impact someone's life, especially in your position where it's the biggest, one of the biggest investments that they'll make is in purchasing
Exactly.
a home. So,
So
yeah, so shifting gears here, when I know you said you've been in the industry for 20 years. When did you start your company?
This company in particular, I recently started TD Home last year. Reason is,
Hmm.
prior to that, I ran for Congress. So prior
Hmm.
to running for Congress, so I was keeping things a little bit short-sighted, not pushing too much, and leaving SunTrust because I've worked for all the other banks, SunTrust, Chase, Bank of America, all of these guys into the underwriting world. So after Congress, after running for Congress, of course I didn't win, but once I get out of it, I figured I will take that experience and push it into the market in Orlando and
Hmm.
help people on a one-on-one basis.
Hmm.
And that's what I've been doing so far.
Yeah, so when you first started out 20 years ago, what were some of your struggles or obstacles that you faced?
Well, the first thing it was to decide whether or not I'm going to do focus more on mortgage and real estate because
Hmm.
my whole family they all doing that.
Yeah.
So once I realized that it doesn't matter, I need to do both. So once I need to do both, and it becomes a non-factor for me because even before I started it, my brothers I would still be there like interning with them, go show properties with them when they doing flipping, we buying property and flip them. I will go there and experience and understand the profit the, that comes with it and how this market really works. So when I jumped in it myself, it was kind of like I already know how to ride the bike.
Yeah, so they were kind of like mentors to you or coaches to you. So
Exactly.
you were in a good position. So now let's say that you were, to give advice to someone else. Let's say someone else was just starting out. What advice or tips would you give to them?
If you in this industry and you come in for the first time, don't listen to other people who and focus on money. Because
Hmm.
if you focus only on money, you will make money regardless. So if you focus on money, you are not going to be successful. You not, because money comes with it. But the most important part is to be a people person and start thinking about people versus money. The minute you start thinking about people, you X out the money factor. You will find out that you'll be okay. You'll find out that you don't have to lie to a client and get the client into a situation for you to make $5,000, $6,000. But guess what happened? If you tell this client the truth, even if they do not take the mortgage from you, they will understand and respect you. So down the line, they will refer tons of people to you. What I tell all my people, especially the guys who works for me and with me, I said, listen, every client that you have is three more clients within a year. Each client will represent three more within a year. If you messed up with this one client, you messed up three other ones
Hmm.
for this year. So next year, if you do 12 this year, you can and you do it well. You do it well and you respect the client and you make sure the client gets what they need. Next year, you can get yourself ready for about 36. So then again, if you do bad, then bad will come back to you.
Yep.
So focus on the people, not the money.
Yeah, I've noticed that just talking to a lot of, interviewing a lot of people, they got in, some got into the industry for the money, but now that they've, now all of them, they realize that you have to put the clients first and the people first, and then the money comes with it, like you were saying.
Exactly, exactly. And I've seen it with my brothers. I've seen it with myself. I started at a very young age, and yeah, I didn't understand it when the market crashed last time. I remember someone told me, "Hey, the market is not gonna stay that way." Back in '04, '05, I'm like, "No, people still gonna need house, and house is still gonna go up, and we're still gonna be fine." And I'm young and cocky, but now not so much.
Mhm.
Now I'm more humble. And I will tell you, yes, the market, and I've said that on a TV interview last year when I was running for Congress. I said, look, around this time, we will see a slowdown in the industry. Not even the coronavirus, that's a different beast of its own. We
Yeah.
would have already seen some sort of leveling up on the market because it just can't go that high. Because in Orlando, for instance, housing are becoming unbearable. So people has to move out of the city in order for them to be able to find a decent home at a decent price. But now, if this wasn't there, we would still see a leveling up. So everyone else who's ready to refinance and everything else, I think this is the time for them to do that. Especially, rate is extremely low right now, and it's even gonna get better. We've heard it from many, many people, from UWM, from all the banks. This is going to be wonderful for everyone who's trying to be in a sense where you keep your mortgage low, live within your budget. And guess what happened? I pray every single day. This coronavirus never happened, but it's here. Now it's here. What do we do? How do you protect yourself and your family, not just from the virus, but from financial burden that you may have to deal with? Now, refinance may be your option, forbearance may be your option, and in some cases, you have to be an option for yourself in a sense where you have to be the one that call the shots and telling yourself what do you want to do, what you don't want to do. And in my opinion, you just gotta sit down and think straight and call a professional. Don't take people. I mean, social media, everybody's throwing a meme here and there, but call a professional, someone who actually know what they're talking about, and then get advice from them.
Definitely. Nobody wished for this situation, but we've got to deal with it now. Um, in recent years, technology and social media has made its way into the industry. It's come a long way since you started 20 years ago. How would you say this has impacted you and your business?
I'm always evolving. So I'm the youngest in my family. I'm 100% paperless. I'm working from home right now, and 100% paperless, meaning my whole office is also everywhere I go. Um, so that is something that I think everyone needs to embrace because like technology will come. It's not going to slow down. I
Yeah.
remember back in the days we used underwriting a file. You have a stack of paper that you got to flip to get to. But now you don't have to do that. You could streamline it online. You can get all these things happening. So you have to adapt to the situation. And if you don't know it, hire the young people who actually knows it. And
Mhm.
then you will find your life will be a lot easier. But technology has made it easier for me, I would say, to reach out to people, especially Facebook and every place else, where I can push my advertisement and be able to reach people beyond my word of mouth type of environment. So that's a plus, and you spend a lot less money advertising and get to the clientele that you're trying to get to. But other than that, I mean, for me, it's been a blessing, and I hope everybody else within the industry is embracing technology as I have.
Yeah, definitely if you embrace it and you take the time to learn it, it can work for you. It'll allow you to like streamline tasks and automate things. But if you don't and you don't adapt to it, then it definitely will make your life harder. But you mentioned, social media. Are there any modern strategies that you're using or taking advantage of right now to scale your production or just organize and systemize your business, or even maintaining relationships with clients?
Yes, I mean we have different softwares and so forth that we actually using to help our clients connect with our clients more often. Even on WhatsApp, for example, is one of the way that I send videos to all my clients at one time. You broadcast everything that you want to say. I could make a short video and send it to all of them at the same time, and they can share it to thousands and thousands of people. Um, but at the end of the day, for me, I create a team in my office to deal with it. in particular because I want to literally focus on what's next and how I can bring my client's payment down and how I can structure a deal to make it sweeter for my client.
Hmm.
Now, my guys, such as I have Ronald, a phenomenal social media strategist at my office who does that, and we have radio. We have two radio shows talk shows that we have that also push our voice out there, community after community. We use different language to push things to people who speaks different, especially in Florida. In Florida,
Mhm.
we have this melting pot. So everyone has different background, different culture. So we try to stay culture motivated, culture sensitive, and also understanding everybody's life in the way they see it. That way, we can reach out to them the way they feel like it's more feasible and understandable for them.
Very cool. That's very cool. So last question here. Let's transition to the buyer side now. So you said you work with a lot of first-time buyers.
Yes.
Okay, so what do you see as the big misconception or fear that your first-time buyers, have uh, in regards to getting a loan before they start working with you?
I mean, a lot of first-time home buyers. The thing is that we have seen a lot of them, especially in the young people bracket, is where a lack of savings. A
Hmm.
lot of people are not saving enough, thinking that programs will be out there. City, county, everybody's going to be out there. But what's not happened, what hasn't happened so far, is where the city and the county and everyone else is not broadcasting what are the criterion to get into those programs. So when the time comes, they may be ready. Okay, I'm working on Credit Karma. I'm disputing stuff here and there, and I want to get my credit at a certain level. But hey, you find out now your debt to income ratio has to be a certain amount. Your credit score has to be a certain amount.
Yeah.
You can't be creative on your tax return
Hmm.
and then get a loan. You have to know these things before you go through it. So I think a more educational things is not readily available
Yeah.
to first-time home buyer as much as they should. I think this is something that I'm really gonna go into focus on because the misconception of first-time home buyer is that once you get your credit right, you can get a home, and I've seen people get denied with 700 credit score, so it's not
Hmm.
a done deal. You have to have all of the rest to put together before you can go ahead and say, hey, listen, you know what? I'm going to get a home. And be 6 months prior to, which I tell most people, 6 months prior to you buying a house, learn about buying a house buying process. What are the things that are available? I might qualify for a first time home buyer down payment assistance program. If so, what are the criterion to get into that? And second of all, do I have the right amount of saving? And am I making the right financial decision by buying a car prior to buying a house? Getting a $700 Mercedes or BMW bill before I buy a house. Does that make sense? So all these things are um, educational things that we really have to push out there and tell the people, hey, listen, this is how it works. Sometimes you have to bite the bullet. Sometimes you may have to not go to the club or not buy a certain kind of clothes or shoes that you want a $200 a pair of sneaker, and then put that $200 towards 401k. Because guess what happened? If you have an employer that matched that $200 and make it 400 for you, so you just waste $200 on a shoe, but you could have made $400 out of that. So all of these things are education that I think our I'll say political guys supposed to put out there was not being thought. Like a lot of people, they get that education from parents. So if your parents make a good decision, then you end up making some good decision because they know they've been there and they've seen it. What I've said to everybody else, my son right now has the highest credit score in my house, and he's 20. He has the highest score in my house. And do you know why? Because I monitor this kid like, I watch him. I look at everything that he does, making sure that his payment is made. My wife has this thing that the way she does, she put everything on the calendar. This is how you do it. This is how you do it. This is how you do it. When that time of the month comes, you pay all your bills. and this is how you do it. So now we're teaching them a new way out. So the things that when you don't have to spend 40, 50 to buy a home, or you don't have to go through so much to buy a home. Because right now he's 20, and before the coronavirus, he was looking for a home to buy to invest in the house. And I felt so proud to see my young son. I mean, he's my firstborn. To see him now, okay, I'm going to buy my first investment home, and I'm proud of that. But guess what? Although my family was in this industry, I still didn't get the credit. Credit talk. Like when people say you have to talk with your son, so we should be having that kind of talk with our kids. Financial literacy is the biggest issue that we have among our young people. And if we don't fix it, the next generation is going to be bad. I mean, the future of the market depends on them. Because if you think about it, 10 years from now, everyone who's 20 is going to turn 30. So what's happening with a bunch of people becoming 30 and getting married and all that? We have more children. And what happened is apartments is going to keep going up and up and up, and none of them will be able to make a financial decision that actually
Mhm.
makes sense.
Yeah, and like you mentioned, like your son, not everyone has that luxury. There's a lot of first-time buyers that are misinformed or just not educated. So
Exactly.
it really comes down to finding the right loan officer that will basically hold your hand throughout the process and advise you and educate you throughout the entire process.
It's supposed to be like that. And, in this business, you have to be an educator. You have to be someone who cares. You have to be someone who doesn't look people down. Some people may not have all the bells and whistles that you have. It doesn't mean that that person is a bad. Someone may have made a bad decision sometime during their lifetime. And if you see a way, a path to help them straighten that position and get them into buying a home in, 2, 3 months down the line, take the time to do it. It's not going to hurt you if you're in this industry, because it's only going to make you better as a person, and it's going to help someone get their life together, and you credit you for that. And that's the most rewarding thing you can ever have.
Absolutely. Well said. Well, Wade, I really want to thank you so much for coming on the show today. I had an amazing time talking with you, and I really, really appreciate your time.
Me too. Thank you, Rico. I appreciate it. Till
And
next time.
and thank you to all the viewers for watching, and we'll see you again next episode.